You're watching Kelowna Now Live. I'm Jim Czek. I'm joined today by Ringo and Adam Mitchell of 360 Lending. They're mortgage brokers in Ontario, and we're here to talk about the problem Canadians are facing right now. How big is the problem?
Pretty significant. We deal with multiple people on a daily basis, and we are seeing a significant uptick in people struggling to make their mortgage payments.
Yeah, because like a lot of people did these variable rate mortgages at lower rates, and the rate was raised 19 times by the Bank of Canada, and now they're renewing their mortgages, and some of these payments are up, 60, 70, 80%?
Yeah, it's pretty drastic. As we were just discussing, the government essentially put the word out to all Canadians that they were going to keep rates really low. And as you said, it's basically 19-fold. And when these mortgages come up for maturity, it's very tough for them to make their payments.
Yeah, because Tiff Macklin said when the Bank of Canada rate was 0.25, he said that Canadians can rest assured and go ahead and get that mortgage. The Bank of Canada will not be raising interest rates into the foreseeable future. So, Canadians can feel confident in picking up that mortgage. And a lot of Canadians did. And a lot of Canadians got mortgages at variable rates because that's where they qualified. And, they wouldn't qualify at the higher rates. So a lot of traditional banks put people into variable rate mortgages.
We have seen a lot of homeowners been affected by this. And our issue with this is that the government has dealt with inflation before. They knew that inflation was high, and they knew that they were going to have to raise rates. So I'm not sure why they would put out that message, because they knew that with the interest rates going up, that the real estate prices are going to soften, and there are going to be a lot of people who will have issues making these payments.
I seen a story on another outlet, and it was a Scotia Bank. I'm not 100% sure on the bank again, but the person couldn't make their payments at the new payment rate, and so they gave the house back, and then the bank is suing them now for the $200,000 difference in the market value.
We're seeing variations of that story play out across Canada. It's not atypical for us to see clients who have bought during the COVID era or around that era, and then now their mortgage.
I think we just lost you there for a second. See if that comes back. Did we lose that connection?
Losing their entire life savings, and the banks have to go after their money.
Well, the banks aren't stepping in to provide any kind of assistance either.
Yeah, so I mean, a 19-fold increase is pretty high. And what, like a typical, like if somebody was paying $2,000 a month at, say, 1.75, and now they're at 5%, what's that difference in payments?
I can't tell you off the top of my head, but I can give you a personal example. I bought my home in around 2018, and I think I was locked in at just under 3%. I think it was in the mid twos. And by the time I got my renewal from TD Bank, my renewal rate came in at around 6%, and my payment had increased by about $1,200, which represented about a 60% increase.
Yeah, so I mean, for a lot of people that are budgeting with inflation in groceries and gasoline and all those things, a lot of people don't have an extra $600, $1,200, $2,000 a month to meet these obligations.
Well, that's correct. And, really the reason behind the increase in rates is to slow down the demand for frivolous products. So as we understand why they did it, it really comes down to the messaging before they did it, as we discussed at the beginning, was they promised to keep rates super low. So people did break their existing first mortgages, locked in at those 1.8% variable rate mortgages, and then the messaging changed.
They even tried to sell. They even tried to sell the message that this will make homes cheaper. It's actually made homes more expensive, right? Even though the prices come down a little bit on homes, but the mortgage payment's gone up.
Correct. And then if we keep, the immigration flow the way it's projected to be, house prices are going to continue to rise.
The reason we reached out to you, you sent out a press release showing about 10 homeowners stating that many of them couldn't even get renewals from traditional banks. Maybe just talk a little bit about that.
Sorry, can you repeat that question?
So the reason that we reached out is you guys sent out a press release that stated, like, had a bunch of homeowners on there saying that the traditional banks won't even renew their mortgages because they couldn't afford those payments.
Yeah, so we essentially put out a press release, anonymous profiles of 5 different clients in different, locations, all had great jobs, great qualifications, good credit scores. And yet they were either not getting renewed or they were definitely getting turned down for refinancing with their banks, which they've had relationships with, for 5 to 10 plus years. And the banks just have no answers for them. And without a mortgage broker stepping in to help, a lot of these homeowners don't know who to turn to.
Right. So that's odd, though. Like you get a mortgage, say you get a 25-year amortization at a bank, like a 5-year term. And then come renewal time, most people think that they're obligated to renew, but this is basically saying they're not obligated to renew. They just at that point can decide not to carry your mortgage at that point.
They can. It's relatively rare, that scenario. What's more common is for them to get renewal paperwork with pricing that doesn't fit their budget. Right. And then they become, essentially they don't have a choice. It's either sign it back and then struggle. I think really the message we want to put out there is there are other solutions. We're shocked at, how often clients will call in, desperate, and we kind of analyze their situation, go through their gross debt service ratios, their total debt service ratios, educate them, and then let them know there are solutions, because as this is a major problem now, it's not going to be forever. So a lot of these people just need a Band-Aid solution, and that's what mortgage brokers can provide, is that Band-Aid to kind of get them over this hump so that when rates do start to decrease, more options become available to them.
So what are some of those solutions? Maybe just share a couple of those.
Well, typically in the mortgage world, you have the A banks, which we all know and love, the big 5. And if you don't qualify with them because either credit scores or total debt service ratios, you can slide over to the B space. And these are also federally regulated banks. They just take on a little more risk. They will take on higher TDS ratios and lower credit scores.
Will that mean a higher interest rate, though?
It does mean a higher interest rate, but it's a solution. At the end of the day, it's a solution, and we like to call it common sense lending, whereas the banks will use, especially if you're self-employed, a B bank will use your bank statements to really determine how much cash flow do you actually have. And if we can't squeeze you in with a B bank, then we can slide over to the C space, alternative lending, otherwise known as private lending. Sometimes has a bad stigma, but I'll let you know, they get a lot of people out of a lot of jams, and it is a short-term solution that provides a lot of value.
And like you're saying, that sometimes we just have to do a temporary solution until we can get lower rates and then get back into the traditional lending.
That's the name of the game. A lot of times it's the name of the game is increasing your borrower profile. So, if your credit score isn't tip top, if you're below a 680, let's look at consolidating your debts. Let's look at lowering, because once you consolidate credit cards from 19 to 20, 30%, and you consolidate them at a much lower rate, you can see payment savings. Once you see payment savings, your quality of life gets better and your credit score starts to increase. Once your borrower profile is improved, then we can explore taking it back to the A or the B space.
Some good news out there is that the Wall Street was expecting in the U.S. about a 7 rate cuts this year. I think they've trimmed that back down to 4 rate cuts. But this morning, the Bank of Canada came out, or the inflation rate came out this morning at 2.9 versus the expectation of 3.3. So that should allow the Bank of Canada to ease rates. I don't expect them to ease them very quickly. But I imagine, what I see is that perhaps maybe a rate decrease in the next one, like of a 0.25, but I think it'll be a slow coming down. Is there anything that you guys are seeing out there that would either agree with that or disagree?
We're seeing reports from all different sources, from the US, from Canada, even in the European Union, with different inflation progress. So it's hard to say what they're actually going to do. But what we do know is that even if even if Bank of Canada decides to cut rates, it's going to be a slow and gradual process, and there are going to be lots of homeowners that really don't have the time or the luxury to continue to wait for months and months on end without an answer.
I think it's a kind of a crisis for sure.
Yeah, I try not to predict myself. I try not to do too much predictions. I mean, I did learn something during COVID. I know enough to know that I don't know anything because, when COVID hit, I thought the economy was going to tank, and it did the complete opposite.
Yeah. Well, they juiced it.
Sorry?
They juiced it and caused this mess.
Yes.
Right.
And I do know that it's a very fine line with, the Bank of Canada decreasing rates, because there are a lot of, clients, borrowers on the sidelines, and if they decrease rates too soon, it will become a feeding frenzy once again and driving prices even higher. So It's going to be interesting to see how they do this, but it is a very fine line.
I know that Bank of China decreased their rates this morning on mortgage rates, so that was one of the banks that, and usually you can start to see this trend. I mean, most international banks have been on pause for a bit, and I do believe that we will start to see some decreasing, but like as you said, it'll likely be a gradual decrease where people are probably looking for more substantial relief than a gradual decrease, right? So
yeah, and I doubt, like I said, I try not to predict, but I doubt very highly that the rates will go back down to where they were.
Not anytime soon, probably, that's for sure. And then again, what you brought up the point of immigration with adding 1.5 million people. Obviously, an strained housing supply is going to just drive demand, right? So, and that's one thing they don't really talk about, that the amount of demand that drives for people. Well, obviously, those people need homes or rentals or anything, right? And then also the corporate buying of residential homes too. That's a big factor too, right? So we're seeing that a lot in the U.S. for sure too, and some of it in Canada.
Yeah, that's all happening. I don't want to speculate too much on that. I don't have too much information on that, but yeah, that is what's being said out there.
So I guess like for you guys, the best thing people can do is reach out to mortgage brokers and that and see what options they have. I guess the more information you have, the better.
Yeah, that, and also do some personal auditing as well, just making sure that you create a budget and stick to it, especially over the next year or so where times are going to be a little tough. Just make sure that you stay within your budget and talk to a professional if you need it before the problem arises and becomes a problem that you can't handle.
Yeah, I think we have a few. Well, I know we have one of your clients lined up to talk about her situation. So we'll continue down this story path. Is there anything else you want to share right now?
No, I think that pretty much sums it up. To kind of play off of what Ringo was saying, I think it's important to say you speak to a reputable mortgage agent or broker, because there's a lot of us out there, but we've always lived by kind of the 80-20 rule, where 80% of us don't really know what we're doing. So it's important to look at reputable. And if you're going online, do look at reviews, because that matters.
And you guys are 360lending.ca, correct?
Correct.
And it's Ringo So and Adam Mitchell. And again, people, it's always good to get good information and get options, right? To talk to people. And then, and you're not alone. I think that's the message I would share with people. You're not alone. There's many Canadians facing this similar predicament. And sometimes people feel ashamed when they end up in a financial mess. And I think Canadians need to know they're not alone in this mess, right? So
I was just going to say that a lot of, like you said, many people are facing the exact same problem. So don't just speak to your friends. Talk to a professional who's been dealing with this issue with many other homeowners. And some homeowners need to get used to the fact that rates are going to stay high for quite a while. And if you're coming from the A space, you're banking one of the major banks like TD and RBC, you're used to the lowest rates, out there on the market. But sometimes you've got to take, maybe an offer from a B bank from one of the lesser known lenders out there with a higher interest rate if it means saving your home.
Yeah. Okay, well, I thank you for your time today, guys. Thank you, Ringo. Thank you, Adam.
Thank you so much.
Have a great day.
You too. You've been watching Kelowna Now.